Steve, on Monday, Alcoa really kicked off second quarter earnings by stinking up the joint. Then the big banks came out here on Friday. JPMorgan, good news because they only lost $4.4 billion on trading.
Considering they had net income overall of $5 billion with the $4.4 billion trading loss from the famous London whale trades, I think it's a good sign. I think the fact that they were able to earn money, I think the fact that they are taking the loss, Jamie Dimon said today that they're actually unwinding the positions more quickly than they thought they'd be able to. Big black eye for the company, no question about it. Dimon's going to face questions over this for certainly the rest of this year and likely far beyond. But the fact that they were able to make money, the fact that they said they are seeing fewer charge-offs and delinquencies in their consumer credit portfolios, things like that, all good signs. Now, another interesting thing today was Wells Fargo came out, and they're a much better read on the U.S. economy in the sense that they're the biggest mortgage lender in the country, much more tied into, JPMorgan's big in that, but Wells Fargo's the biggest kid on the block. Their earnings were up 17% for the quarter from a year ago. Their origination was up. Their non-interest income, which is all kinds of fees and servicing, that was up huge from a year ago. Certainly a good sign, not coming out certainly in the economic data we're seeing, but the fundamentals of these banks are looking a lot better.
That's good news. I mean, the housing's not dragging down banks anymore, and you've got JPMorgan at least with all of its cards on the table, even if they don't look good.
Completely agree.
Awesome. And Hala, financial sector chicanery continues. It was MF Global not long ago, and now we've got Peregrine, tales of suicide, near suicide, investors' money still gone. What's up with the regulators? Where were they?
It seems like the scandals have moved from the banks now to these futures brokerage firms. And within 9 months, we have two firms kind of blowing up and claiming bankruptcy. And in the middle, all these clients have lots of missing money. First, we had 1.6 billion missing at MF Global, and now we have 215 million, a lot smaller than MF Global, missing at Peregrine. And it'll be a long time before I think this money is recovered. We haven't been able to find 1.6 million. There's a very small chance we'll find that 215 million very soon.
Which federal cops are on the case? Who's supposed to find it?
The CFTC is the main regulator of these brokerage firms, but they have a frontline regulator, the NFA, who is a self-regulatory organization, meaning their members are regulated themselves.
Self-policing, how nice.
Yes. Didn't work out so well for these two groups nor their clients.
Agostino, not bad news out of China. Yeah, right, GDP's down year over year, but at least it's out there, kind of like the JPMorgan thing, right?
I don't know if I'll connect to JPMorgan, but I think there's a couple of factors to think. We got slowest GDP growth in 3 years. That's not necessarily good, but it came in line with expectations. And some of the analysts at Nomura have been saying that it's actually going to rebound in the second half of the year. So that should be pretty good. And the reason why is because supposedly they've learned from past mistakes, which we know is not necessarily what always happens, but they're going to unleash stimulus and rate cuts progressively, and supposedly they should get some growth coming in the second half of the year, so that should be good. But at the same time, we have deflationary pressures, and we have an economy that's slowing substantially, even though it's growing way faster than anybody else around the world. So there's good and bad things there.
Last time it was huge steroids for the Chinese economy, and they did too much. They got a property bubble that's unwinding. How are they going to stimulate now?
Well, what we've been hearing is there's going to be a lot of fixed investment. So we're afraid a little bit that there might be more of this building roads and ghost towns that no one's going to use.
Right.
But at the same time, there's that saying that you get people to build a ditch, you pay for them. You get other people to fill it up, you pay for it, and then people have money in their pockets and they're spending it. The question is it sustainable? Let's hope it is for them and for everybody else in the world economy.
Oracle of Omaha, he's saying that the euro is toast.
Well, the third big player in the world economy, we got the U.S., we got China, and now we got the euro. So we saw a 2-year low in the single currency against the dollar this week.
About $1.20.
That's not good. And Buffett came out and said essentially that they can't really get things to work out because everybody's going their own different way. We got Merkel one way, Hollande the other way. Spain's being forced to impose more austerity on their people and impose losses on their creditors. So, I want to be optimistic, but when you see Warren Buffett being bearish, you got to watch out.
Yeah, that's true. Okay, I agree. I mean, there's been a lot of pessimism. You've seen pessimism all around. You've seen it in Caterpillar is now as low as it was before. Litro last October. GM is low as it was since Christmas. Ford is at a 52-week low. 7 times earnings for Ford, 6 times for GM. I think a lot of really negative news is baked into a lot of stock prices out there. And with just a little bit of extra good news or absence of bad news, like the Chinese GDP or JPMorgan losing $4.4 billion on a trade, at least it's a certainty. I think once people realize that the world's not going to fall apart, despite many predictions to the contrary, stocks will do fine.
John, it's a great point you make. The bar for earnings this quarter is so low that a bunch of companies are going to trip over it, but it's practically on the ground. So a lot of companies will be able to hop over it.
Right. So next week we've got bank earnings still coming fast and furious. We've got tech earnings coming. Let's talk about some stocks that we like. Steve, what do you like?
Well, I don't know about if I like these companies, but I want to see if there's follow through from the JPMorgan and Wells Fargo reports into Citigroup and Bank of America. Because the improvements they saw, is it just to those banks? Are they taking share from their rivals? Or is it something that's more pervasive in
For the whole sector,
industry?
right? I still like the home builders a lot. Home builders have got great technical strength. Anytime the market's up, they're up more than the market. People still don't believe in a housing rally. So you like Toll Brothers, Lennar, companies like that. They're not in this current earnings cycle, but I still like the home builders.
I'm still watching banks, and I'm watching JPMorgan, not for the same thing. I'm watching them for LIBOR. I think earnings is one thing, but I think they have a big headache coming in terms of LIBOR. We still have yet to see how much settlement they're going to have to put up for there, but I think it's going to be big dollars they're going to have to shell up.
Every municipality in the country could go after them, right?
Exactly.
Yeah.
Well, I'm still with macro, and I'm hearing that the euro is going to keep on falling, and that's not really going to be good. And then we got to see if the European authorities, if Merkel and company can pull another rabbit out of the hat and make it rally back up again.